Hi everyone, it's Evan from the Trade Risk on Tuesday, July 17th here with a market recap video. We are first going to spend some time analyzing the market environment, then we're going to look at a few other markets, get into some leading sectors, and then some individual names, and finally some trade ideas for the remainder of the week. Now before we get into tonight's video, I just want to remind everyone once again that I am hosting a webinar next Wednesday, July 22nd at 7:30 Eastern. There's a few topics at hand I'm going to be going over. Mainly how I analyze price action, how I find my trade setups, and how I position size and manage risk in the trades that I take. So this is completely free. TheTradeRisk.com/webinar. You can register here. Just drop your email in. I will send you the URL to the webinar. And if you cannot make this date, I will also send you a recording of the webinar as well. So even if you can't make it and you want to attend, or if this sounds interesting to you, head to TheTradeRisk.com/webinar, drop your email in, and I look forward to hopefully speaking with a lot of you guys next week. I will be doing Q&A at the end of it, so as long as there are questions, I will stay and help out and answer as many as I can during that time. So I'm looking forward to it next Wednesday. I'm really excited about it. So getting into today's action, we had a nice session for the bulls today. We closed up 43 basis points in the SPY, and you know, it's our third green close in a row, and it was almost at the highs of the day. We had a small fade here, but effectively a nice green body candle once again. So this move has happened pretty quickly here, and last week, you know, we were talking in this messy range down here. We were talking at levels of 204.50, which seemed like such a distant memory now, given where we are. But the volatility was, you know, very elevated last week, the last couple of weeks, and what we basically saw happen was some violent indecision down here at these prior at this prior inflection point right around 204.50. You can see this is where the market held earlier in the year in March and April, and we managed to hold it again so far, and that's what the market is trying to tell us here. We had, with yesterday's gap up, I think really left behind in the dust this 208 level, which was very important for us to take out. This was keeping a lid on price for the past 2 weeks action, and given the nice gap up and close yesterday, I think that gave you some confidence that this might be in fact a short-term low that got put in the market here. And here's another piece of here's another clue that gave me some confidence as to yesterday's gap up, was the McClellan oscillator. So I've talked about this in the past. I really like looking at the McClellan. I think it's got you can derive a lot of very interesting information off it, and what I really noticed at this thrust higher was the acceleration that we saw in this indicator here. Now again, the McClellan oscillator is giving us an insight into the health, the broad health of the market, what's going on underneath the hood, if you will, and we haven't seen this type of acceleration basically all year. I mean, we've essentially kept a lid. The McClellan all of 2015 has, the numbers are irrelevant because it's going to change. It'll be different depending on what kind of what chart you're using to calculate this value. But you know, in this case, 85 or so was the cap that we saw all year, and you can see we now punched above it. We're at 140. Again, the numbers are relatively meaningless here, but the key is that there has been in this recent thrust some strong participation here. There's been basically some build up. There's a lot of participation. That's what you want to see, and that's what you want to see, especially as you start to clear an important level like the 208 level that we've been talking about in the SPY. So that is encouraging. I mentioned yesterday I wouldn't be surprised to see us testing 212 here in the near future. You know, and again, we saw a nice continuation towards that level again today. Now we are slightly stretched here on some short-term charts. We could definitely use a day of rest. We could definitely use a few days sideways, maybe even a small pullback. I think the bottom line is 208 on the downside is a good level to trade against right now, and looking at some of the leading sectors where you want to be participating in, and we'll get into that in a little bit. The IWM Similar comments apply. We're coming back into resistance now at 126.50. This is where we failed in April, so this should be a little challenging here, just given the pretty sharp rally we've had up to this level. So not quite at all-time highs, but still very constructive. And then the Qs, again, we're coming back into resistance here at 111. So all of the markets now are heading back into sort of the upper range, if you will, or the upper previous highs. And I think that will be a test over the next day or two, whether or not we can take those out. Given the strong bounce off of the lows here, so the 3-4 day fast move we've had, I would expect some difficulty here at these levels, but we'll have to see what we get if we do get that test in the next few days. Let's look at some other markets real quick, and then we'll look at some leading sectors. First is TLT, and still struggling to stabilize, but the bulls are barely holding on here. 115 or so, that's a very critical level. That's where we've been basing out now since the beginning of June. We want to continue to see that level hold if you're bullish in bonds, and potentially again you need to get a test back out of this 119 and 120 level to really get anything going there. USO, again, we had that rollover last week. It's going sideways here. It's looking real weak, but again, today still did put in a little bit over 1% move. But the fast-moving averages still curling over. We're back down towards the bottom end of this longer range that we've been in basically since February. So let's see what USO does. Still looks a little weak. The damage from the past week just needs to be healed, so we need a little more time there. UNG, this one down on the day a little bit today, still in the middle of this range, so not too actionable. Still needs to get above $14.50 and $15 really on the upside to get something going on that name. Gold, back to the lows here. This one's still in a messy range, but if you look at a weekly chart, you can see we're back at an inflection area. So let's see if the bulls can hold us, step in again and buy gold here at 110, or if we're going to roll over and continue this downtrend that we've been in now for a couple of years in gold. And silver's the same thing. This is a weekly chart again, but silver, we already pierced the previous lows here from the end of 2014 and beginning of 2015 lows, and now we're kind of just hanging out here, where the fast-moving averages are still curling over. This still looks to be a pretty messy chart, and there doesn't seem to be any control by the buyers right now. So this is pretty much just an avoid in my book for now. Getting into some other leading sectors, IBB, so again, this is once again back to all-time highs and convincingly in control here again as a leader. The IBB closed up today. It's already up 4% on the week, closed up almost 2.5% today. Looks real good. You might be able to argue that it's overextended a little bit here in the short term, but I certainly wouldn't want to fight this. It's just not worth it because there's definitely money rotating here still, and it's not showing signs right now of slowing down. So that is definitely a sector you'd want to pay attention to. Very similar here, healthcare closing at new all-time highs today as well. XLV, real good sector, hot sector to have to look for setups in. Consumer discretionary now breaking out to new all-time highs. It was in this holding pattern for basically since March, and we got a nice close today, a little bit of continuation, nice close yesterday, a little bit of continuation today. So XLY looks good, and then finally XLP, the staples, haven't quite broken out yet, but you can see they're back to the top of this range that we've been in since November, December of 2014. So if you look at a weekly chart, you can see really cleanly consolidated, at the highs here, and it looks like it could be getting ready to go again. Perhaps this is a sector that we'd want to see break out, to help fuel our breakout in some of the broad indices as we start to retest those highs that we were talking about earlier in the indices. Let's look at some individual names now that we know what sectors we want to pay attention to on the long side. First is Apple, and Apple, it's heading back to this trend line, if you will, that was holding as support for quite some time. It had a nice little kind of washout bounce here. Still not the cleanest pattern. There are certainly better setups out there than Apple, but for now, the bulls are stepping in again. We'll have to see. It doesn't interest me all that much, to be honest with you. There's just better names out there. Google is one, although I think Google has earnings real soon. might even be the end of this week, or I know they're one of the early reporters. So Google just off to the races, continued from yesterday's pattern here. Again, on the weekly chart, you can see it's been in sort of a holding pattern in a range now since the beginning of 2014. But it would be real interesting to see if we are starting to potentially see a breakout from this range. And this has been a pretty a pretty prolonged range now. So that could be a pretty big move there in Google. On the long-term players, if that trend is going to continue. So certainly interesting there, and we'll have to see how earnings go for Google. Netflix, I know, had a monster move again yesterday above $700, cooled off just a bit today, but again, still not, you can't short this one. It's been ripping to the upside. It's been tough to get involved in it, and it just continues to pay if you're a long-term holder in Netflix. So Netflix still looks good. Earnings coming up. It's had a lot of movement since its last earnings, so I think it'll be interesting to see how this stock reacts given its report. Amazon, again, this one acting real well again today. We can almost kill this off here, but this is accelerating out of the previous channel that it was in. It held its earnings gap from last quarter, and it's continuing to new all-time highs. So this one looks real good. Tesla has came off a little bit originally after tagging all the way up to 280, not quite the all-time highs, but it got a quick pullback, and now it's starting to perk back up again. So you can see there's interested buyers in here at just even the slightest dip in Tesla. So this one, again, similar to Netflix, has been running higher, tough to get on board, and this one looks to be back in motion on the upside. So we'll have to see how Tesla continues to act. Facebook, all-time highs. Yesterday, gave a little bit back today, closed on the lows, so not the best looking candle here for Facebook, but still it's at all-time highs, trending higher, looks good, not quite actionable for me, but I would be keeping an eye on it. And Twitter, look at this candle here with the tail on it. I know there was a lot of potential speculation on rumors, buyouts, as there has seemed to have been in Twitter over the past few weeks and months. Regardless, I mean, it still had a nice session, closed up 2.5%, took out this 36.25 level, which I do think is very important. So rumor or not, we still managed to get that close above there. I like Twitter. If it wasn't, I'm not sure when earnings are, but I do like the close above $36, and I think it's an interesting own versus that level. So I like Twitter. But again, the damage has been there, and you just got to be careful of all those rumors and whether or not that's just impacting the stock in the near term. Now, Baba, this one had that quick flush out to new all-time lows here in Alibaba, but it has bounced a little bit. Still, I'd argue that there's just much better setups out there right now than focusing on something like this. It's trying to reclaim the fast-moving averages. You want to see it hold back above $81. Doesn't look too actionable. The bounce is nice, but let's just give it more time and see what happens. I think GoPro is something that's a lot more interesting. I think we talked about this pulling back here, and we wanted to see how it reacted at this $50 level, and we definitely got our answer. There seem to be some eager buyers there. We've perked up a little bit, all the way back up to $55. The moving averages are curling back over, so back to the upside. So this is much more interesting. It still doesn't seem that actionable to me, but if this was all we get for a pullback after, if you consider this the start of the impulse leg from $38 all the way to $60, then we had a $10 pullback. Pretty healthy action if we see this continue. So I like GoPro, the formation there. I just got to wait for a better setup. Now for some names, some ideas, trade ideas into the rest of the week. CEMP, we're going to stick with our biotech theme where the strength is. I think on the weekly chart you can see what this is looking like. It's been consolidating nicely after this ferocious run higher at the mid-end of 2014 all the way into March of this year. So this one looks pretty good. I mean, another basically above today's highs, above 38.50 or so. This one certainly looks above $39, let's call it. Certainly looks in motion to go. 6% move today already, so it's a little bit of a chase on effect right now, but if you're looking at it from a weekly time frame or a longer time frame, that one's certainly interesting, and so is X-Ray. This one, again, sticking with our healthcare theme, This one not quite ready yet, but above 53.50 I think is pretty interesting. If you look at it here on a weekly chart, you can see very clearly what we're talking about, and that's another one that I'd be looking at on the longer time frame charts. And then some of the more quicker actionable ideas, again in the biotech space, I think this one here, OPK above 1685, has been a little bit of a ceiling here in the short term on this name. Had a nice day today, but couldn't quite take it out. So this one could be interesting above today's highs. And then finally, out from left field is JCPenney. I think this one's interesting again. If you look at a weekly chart, you can see what I'm looking at here. This $9 and 15-20 cent level. This has been a resistance level going all the way back, or an inflection point for sure, going all the way back to the end of 2013. So I think if we get above $9.20, you might get a nice pop here in JCP. So I'd keep that one on watch. And that is all I have for today. I'll be going through some more of my trade setup scans I didn't get to finish today. So I might be posting some more ideas later. Otherwise, check out the webinar for next week, thetraders.com/webinar. And as always, thank you for watching. I will catch you next time.